Well, do you have your party hats available and your champagne already poured? The markets were looking for an excuse to party and to rally, and the CPI gave them just enough to get out all of the noisemakers. The PPI, of course, was a little bit cool yesterday, setting us up for the CPI today, and the CPI was a beat. And the Dow jumps and yields have dropped nicely. I think last time I checked, around 12 basis points. It's very unlikely that this minor beat will be anywhere close enough to get a drop in the Fed rates in 2 weeks. But inflation at least appears to be a little more tame. This report is not as fantastic as the stock market gains this morning and the bonds yield dropping would suggest, but we'll get to that in a few minutes. The details are a little stickier than at first glance. Anyway, Tesla has been wanting to hang around its all-time high now for a while. Every time it gets a chance, it gets up into that neighborhood. And so the market this morning is giving it that shot, and it was been sitting around 305 to 415, 416 right now. Last time I checked, 416, a solid $20 gain so far today. Now, as I noted yesterday, sentiment is good over and you know how many headlines I look at every single day, and I would say overall the sentiment right now for Tesla is pretty good. And while I continue to think the current pricing is about where it should be given sentiment, remember now, here's a statement I've made a few times. You tell me what Tesla is selling for today, and I will justify it. I mean that sincerely. If it was 600 a day, I can justify it. If it was 1,000 a day, I could justify it. What do I mean by that? What I mean by that is Tesla is a sentiment, it's a story stock, it's a sentiment-driven stock. Once the sentiment understand, once the mindset changes to where Tesla is all about AI and all about robotics and all about the robotaxis. Once the market, the overall market finally gets that, then they're going to have to start looking at what does that mean? Just like you and I have been doing for months, for 2 years, literally the whole time I've been doing the show, since I've written the Elon Musk mission, I've been looking at and talking about what it means to have a robotaxi future and to have an Optimus future. And what that means is the stock should be at 3,000 right now. I mean, it's just a fact. You've heard CERN Basher and I go over those numbers. I've been talking about those numbers before I ever knew who CERN Basher was. So anyway, so you tell me what the price is, I'll justify it. But right now, given the sentiment, given the headlines, given what I think the street is thinking, given what the retail investors, the percentage of the mix that they make up, I think that the price right now is about where it should be, whatever that means. Anyway, we'll see what happens as we get closer to earnings. I could imagine it going up between now and earnings, and I could easily imagine it going down because I think there's a lot of uncertainty about the earnings. As you know, I think there'll be a beat, but I'm guessing there'll be people out there who think it's going to be off compared to last time, and that could put the stock in a hesitant mood as we go that direction. Anyway, from Reuters this morning, Tesla plans to suspend part of the lines manufacturing its recently refreshed Model Y sport utility vehicles in Shanghai for around 3 weeks over Chinese New Year. Now, normally they would be shut down for about a week, 6 days, something like that during Chinese New Year. So apparently they're going to be shutting down some part of the lines between now and then. It was speculated that some of the lines were shut down or partially being, set up for the new Model Y over the Christmas period because there was evidence that there's clear evidence that they're making Model Y. So this would be maybe the other half or whatever will be shut down for this 3 weeks. You know, it occurred to me this morning that when we're considering FSD's ability to be safer than human, which is the key, right? I don't see anybody applying the benefit of FSD being superhuman to the other side of the equation. Because you see, the car has 100% view. 360. 100% of the time, not part of the time, always 100% of the time, it can see 360 degrees. It does that without distraction or even an emphasis in one direction or another of as where the driver is looking. Not even taking, it's never going to take a quick glance at the girl in the car passing by or the unusual billboard or the idiot driving 100 miles an hour and weaving through traffic or the passenger next to you. The car is more likely, because of that, it's more likely to see the odd incident that might result in an accident. The person in the lane next to you who all of a sudden decides to change lanes, they just don't see you. The accident up ahead, something coming into the lanes of traffic. Yeah, you would see that. Let's say you see that 95% of the time, but the car will see it 100% of the time because 5% of the time, maybe you were looking to the left when that was happening to the right. Do you follow what I'm trying to say here? So at the minimum, we hope that FSD will not do something more stupid than a good driver. So but we know that from time to time it seems to do things that are more stupid than a good driver. But then I know as a good driver, I do stupid things. I sometimes don't see the light or the stop sign, or I, don't see the car that's coming down the on-ramp that goes over two lanes and I'm sitting in one of the lanes it wants to get into. So, fortunately, I see it in time, or it makes its own decision, or I don't see the car in the lane next to me in my rearview mirror, and I start to move over until he honks or until I notice it. But in balancing this, will the car make some mistakes that I wouldn't make? Or will the car be superhuman and make some saves that I wouldn't have done? PR wise, the headlines are never going to be about the accident that was avoided. It will always be about the stupid thing that FSD did that caused the accident. So that becomes the rub. But I think there's a pretty good chance that right now we would probably be better off to let FSD do all the driving, even though it might make a mistake from time to time. I also have another view on the TikTok thing. People think that Elon might be buying TikTok. Well, he might be. He hasn't said anything about it yet. TikTok has denied it, of course, because companies always do that. We have the Supreme Court making some decisions, I think later this week. I can't remember for sure. But most people are like, oh no, here we go again. He'll have to sell all of his stock. And okay, here's what I think. I think Elon could add TikTok to X, and it will be the easiest acquisition, the easiest thing he's done ever, because TikTok is well run. So there'll be fewer changes needed. There'll be fewer reasons for him to step away from all the other activities he's doing right now and have to do a lot of concentrating on TikTok. It could just be added. Number two, I think Elon could add TikTok to X or make it a separate company with zero of his own money. He has people right now dying to invest in anything that he does. Wouldn't you invest if you could? If Elon bought TikTok tomorrow and did an IPO or even a private offering, and he offered you, a private offering, normally you have to have like, $5 million or $1 million or at least a lot of money, maybe $250,000. But he put it out there and he says, hey, if you got $1,000 on this private offering, you can get in. Wouldn't you put $1,000 into an Elon run TikTok? Yeah, I thought so. He could probably raise the 40 billion that people say that it's worth in a couple of days by bringing in the TikTok users into the Elon's environment. He would increase the number of potential customers for his payment plan. He would increase the number of customers for Grok, LLM, large language model, whatever, the AI kinds of things that are happening, and then any other services we know that he's planning to bring to X. So I wouldn't be at all surprised if this happens. I also ran a couple of polls yesterday. Some of these polls, I got this small 100 people, 300 people vote, whatever. And, they are all, Elon enthusiasts, and they're all conservative. They're all men, so it's a very bad polling method. But I think we get some useful stuff out of it. So I asked the audience yesterday to give their impressions of how their friends who are truck drivers. So I have friends that wouldn't drive a truck or probably would never drive a truck. They're sedan drivers, they're SUV drivers, they're whatever, they're luxury car drivers. But I have friends that that's all they drive is trucks. Okay. So what about those people? How do they feel about the Cybertruck? That was my question. And according to those people following me, they say that 23%, almost a quarter of their truck driving friends want a Cybertruck. Another 23%, almost making a total of almost 50%, want a Cybertruck. They just want it at a lower price. Almost half of their friends say they want a Cybertruck. And then 16% fall into the maybe category. So now you're up to, that only leaves 38% that said they're not interested at all. I think that's a phenomenal number. Anyway, I did another poll. I asked people to talk about what their plans are with regard to Juniper. Now, remember, again, these are people that are, Tesla fans. 25% of those who responded said they would be upgrading their Model Y to a Juniper. 25%. And 18% they would be buying a Model Y Juniper as their first ever Tesla purchase, for a total of 43% that say that they're going to buy a Tesla Model Y. Holy mackerel. Anyway, I thought those were interesting. Maybe you don't. Let me know in the comments. I think it's worth talking about. Anyway, this is Randy Kirk. Hit like, hit subscribe, hit notify, and all that jazz. Join Patreon. Thank you very much for those recent people who have joined Patreon. And later on today, we've got Brian Wang probably at the late show, the 7:45 show, and we have Jeff Lutz at the 5 o'clock hour. Well, okay, the CPI, as I mentioned, came in slightly cooler than expected, with core year over year was the bright spot. It beat by 1/10 of a basis point. The negatives were almost 100% confined to energy, which had a huge jump, and food, which had a small jump. I don't think it was all about the eggs, but food was up, but energy was way up. In particular, energy, and then the other thing was housing was flat, around 0.03% month over month. I'm sorry, 0.3% month over month. So that was, staying cool-ish. Like to see it even drop a little more than that. But overall, results were good for the CPI, and that's what one of the reasons why the markets jumped up this morning. We've got the manufacturing numbers in from the Empire State Manufacturing Survey. After holding steady last month, manufacturing activity declined in New York State. According to the January survey, the General Business Conditions Index fell 15 points to 12.6. The New Orders Index fell 13 points to 8.6. It points to a modest decline in orders. Yeah, okay. After dipping last month, price increases climbed in January. Not good, though they remain subdued. That's good. The prices paid index increased 8 points to 29.1. Prices received index rose 5 points to 9.3. Here is the key, however. This is what we're hearing across the board. And this is always important. Think about sports, how important this is. Optimism rises. Firms grew more optimistic that conditions would continue to improve in the months ahead. The index for future business activity climbed 10 points to 36.7, with 53% of respondents expecting conditions to improve over the next 3 months. Employment is expected to grow. Supply availability is expected to be steady. Capital spending remains modest. But guess why? It's because of the change in administration. Okay, this is from Autism Capital. I've never quoted this person before, but he's quoting Marc Andreessen, so I know at least if he can get the quote right, he's a valid source. Marc Andreessen talking about China's manufacturing dominance. These three industries that follow phones, these three industries that follow phones. What? Anyway, he's talking about three industries that China is dominating in addition to phone manufacturing. Maybe that's what that means. But there's other industries as well. But let me talk about these three because they are important and they are relevant to what I do on this channel. Drones, something over 90% of the consumer drones are made in China. This is what the U.S. military also uses. It's the whole ecosystem. It's all the componentry. The Biden FAA has been trying to kill the U.S. drone industry as part of its war on tech. China is now sanctioning our own drone companies for batteries made in China. They have leverage. This needs to change, and I believe it will change. As you know, Elon Musk is a massive drone fan. He believes that all future warfare will be drones, as do I. And now we're talking about aircraft drones, airborne drones. We got to keep in mind that drones just means autonomous, but it's kind of starting to mean the kinds of drones that are in the air, but they're underwater, they're on the ground. Drones are going to be everywhere. All right, cars. The drone supply chain is analogous to the car supply. This is interesting. The drone supply chain is analogous to the car supply chain. The new Chinese cars that are coming out are really good and have a giant advantage on cost. And then 3 robots. The Chinese are 100% ahead of us in robots. We have the leading R&D, but they have almost complete dominance in manufacturing capability. Of course, other than Tesla, they have thousands of companies that make all the components that go into the robots. He gives the example of Boston Dynamics Spot robot costing $50,000. China has a similar product for $1,500. This is all upstream from our military applications because it's all the same supply chain. We have to confront this, he says. Having this fragmented approach where we hate tech and then somehow think we can develop a competitive response to tech is not coherent. I agree. We have no whole of government strategy on technology or China, zero, but we will have in 4 days. As you undoubtedly know, the fourth quarter earnings for a lot of companies have already been coming out for the last 2 weeks, making a bit of news here and there, but the first bunch that really move markets and are undoubtedly part of why the market is up so strongly today are the banks. And 5 of the banks and or financial institutions reporting today all had solid beats. Not even a question. This is definitely part of the excitement today. And there's 4 or 5 more banks tomorrow. Marketplace had this. Fourth quarter earnings season is here. Wall Street expects the best profit growth in 3 years, led by the financial industries, which we just talked about, as consumers keep hanging on while prices keep going higher. For the whole year, forecasts call for similarly strong gains. But when executives from the big banks like JP Morgan Chase and Company, JP this week, followed by big tech companies and everyone else in the weeks to come, talk over the results with analysts, the focus could come down to one person, President-elect Donald Trump. Markets jumped following Trump's presidential election win in November, but over the past few weeks, they've seesawed amid questions about whether interest rates can go lower and how the economy might shake out during Trump's second term. Over the past month, the S&P index has slipped around 3%, made half of it back up this morning. Truly, 1.5 points. I still think we're going to make a run from the second quarter to the end of the year, said Jay Woods, a global strategist at Freedom Capital Markets. It'll be much more volatile than Trump 1.0, that's for sure. We're seeing it now. That volatility is likely to emerge as a topic on earnings calls, and it could come from a number of places ahead as markets weigh the prospects of more deregulation under Trump, which they'd prefer, against the prospect of steeper tariffs, which they'd rather avoid. That's not 100% true. Many companies would love to see these tariffs. Then there's the stuff markets maybe haven't fully processed, like any possible ambitions for the U.S. to control Greenland, Canada, and the Panama Canal. Poll out this morning from Rasmussen, 44% of Americans think we should buy Greenland. Other wild cards ahead, Woods said, include the relationship between Trump and Elon Musk, plans by Musk and 𝐓𝐽𝐽 to coordinate steep government cuts, and the impact these would have on jobs and companies that do business with Washington. Yes, I agree. I think there's a real chance that we could see a recession later this year because of cutbacks on government spending. It's got to come from somewhere, but maybe the rest of the economy will be strong enough, and maybe these people will find jobs fast enough that it won't have an impact. Other things to watch, he added, were the strong dollar, very, very important, as well as the CEO changes at companies like Starbucks and Nike, both of which are trying to turn their fortunes around. Still, Wall Street analysts expect per-share profits for companies in the S&P to jump 11.7% year over year for the fourth quarter that's coming in right now. That's according to FactSet. If that figure sticks, it would mark the best growth for the index since the fourth quarter of 2021, when price hikes and dislocations due to the pandemic fed the bottom line for many industries. Fourth quarter net profit margins for S&P 500 companies are expected to be 12%. Those gains would come as consumers remain selective following 3 years of price increases. And they're not buying durables, they're not buying manufactured products, they're not buying atoms, as Larry said last night. With grocery bills and other costs of living still high, many have turned to the biggest retailers for big discounts, and the food chains have launched an array of value deals to win back reluctant diners. Still, U.S. online spending during the holiday shopping season was up, reached a new high, 241 billion, according to Adobe. All right. What has all of that got to do with where we are now? Well, we just talked about what it has to do with it, but what is it? What is the final impact? Well, the final impact as of now. So the Dow is up almost 700 points, 687.42. The NASDAQ up 438, and the S&P up 101. Tesla up 2112. In percentages, that would be Dow 1.62, the NASDAQ 2.3%, S&P up 1.73, and Tesla up 5 and almost a half. And of course, Tesla sitting at 417, starting, that's above that 415, which is what everybody's 410 to 415. You talk to any chartist and they'll give you 410, 411, 414, 415. All of those numbers I've seen, all chartists offer all four of those numbers, but all between 410 and 415 as far as where we need to launch from for the next move. And right now we're at 417.76. Okay, the Magnificent Seven all up strongly. Apple 2, Google 2.48. So right down the line, Meta 3.68. NVIDIA, one of the smallest gains at 2%. Cathie Woods are all up. ARK up 5%. Square up 4.78. Okay, so you get the point. The market is loving what happened today with the banks and with the CPI. Now let's go see how the bond market is responding. The 10-year is down 14.5% at 4.641. Boy, if this continues, if we could get under 4.5, that would be pretty significant. We could start to see pretty significant moves because this 4.5 is kind of a level where mortgage rates might get back well under 7% again. If we could get down to around 4%, we could see mortgages closer to a 5 handle. So these would be important things to watch. The 2-year is also down 10 basis points, and the 1 month is down only 0.8 of a basis point. Okay. Oil markets, last time I checked, oil was actually headed higher, but let's see. Yep, another $1.63. We have oil. This is very weird. I'm sorry. I'm not sure. I think oil has gotten out of a bit over its skis. The 79.16 for Texas Intermediate, almost 80, 81.12, only $2 difference with Brent. I would, it's not investment advice. Sell short oil. I don't think this is going to hold. This is all about the Russian, the U.S. government putting additional pressure on people that are trying to buy Russian oil. They think there's too much oil out there. I don't think this holds. I could be cold. What do I know? Natural gas over $4 again, up 1.79% this morning. I think that's probably, again, I know nothing. I really know nothing about it. I know almost as much as I do about Bitcoin. Gold up 21 at 2,703, back over 2,700. Silver $31.15, up 2.62 this morning, right in its range. Copper, same thing, right in its range, but up a little bit this morning. Okay, the dollar, you know how it is. It's at the all-time, it's like crazy high. Bitcoin up another 3,000 this morning, 99,562, attempting another run at 100,000. And that gives you what you need to know this morning in order to make decisions. All right, so as I mentioned, who do we have at 5 o'clock? Yes, we have Jeff Lutz. That's always a great show. Then at around exactly 7:45, we have Brian Wang is the plan. We might be talking more about fire stuff. And I know last time I put up a show on the fire, on the way that people could save their homes during these fires. You guys are yawning and you didn't pay any attention and you didn't watch it, but this one is going to be out of this world. Brian and I've spent like over 100 hours studying it. We have information, we have ideas, we have suggestions that nobody's talking about. I think you're gonna. I think you're just going to find it interesting in general. So be sure to tune that one in. Okay. Maybe we'll throw a little Tesla information in there just to wet your beak or wet my, I don't know how what's that saying even mean? All right, let's go back. You could hit the like button. It's good. PayPal up 3.11%. Holy mackerel. Everything is up crazy. Tesla sitting about the same, 416.84 as we bid you adieu. It has been great talking to you.